Welcome. I'm excited that you are here with me again. Welcome to the Ask a TJ show. And this is the show where you get to ask any question, right? Around real estate, around business. And I get to answer those questions. I get to go and do the homework. And over and above that, I get to come back and respond to you. And like it is any other Mondays, we come out live. So, yes, welcome. I see all of you guys who are live with us right now. So, welcome. It's great hanging out with you. And in today's session, we've got someone who's asked us a question. And this question for me is like, wow, it really reminds me of when I started investing myself. So it was very, very close to my heart. It made me a little bit emotional when I thought, let me respond to this one. And what was that kind of question? Let's jump into it. Wherever you are watching us, let me know. So here is the question here. Someone asked the question, and the question says, how do I get my first investment property this year? I think that's like kind of like hard there. How do I get my first investment this year? Not only do they want to get an investment property, they got a goal. They want to do it this year. We are a young couple. This is a husband and wife. We're a young couple starting off in life. We both love property investing, but no one in our family has done it. What should we look out for? Yeah, that's a lot, isn't it? And you all know that, right? I am not the only person who is supposed to be answering here. You get to have the opportunity to also answer these questions. So in the comments, write in the comments. You can as well respond to this. It's a very straightforward question. Some of you are in property number 3, number 5, number 10. Some of you are on 100 beds for student accommodation, on 300, on 500. And some of you are doing warehousing. Some of you, I can see you're doing warehousing and medical suites and so on. So shout out to you, all of you. But here is someone else. Let's look back, right? When we were starting, how would we answer this question? So let's help out someone else. Maybe with what you've learned now, how best would you do this? So this is what we're gonna answer this question. And I've prepared, I kind of like looked at myself back in the days and I'm like, if like this couple here, they really remind me of me and Jenna. Why? Because nobody in my family had done it. Yeah, that was number one. Number two, we were just young couples that came together and we're trying to figure this out. So now the question that we're asking ourselves is that how do you start? And I'm just gonna start off by jumping onto I think the first thing that you need to do. I'm gonna give you round about maybe 10 to 12 things that I think you should do in terms of how do you actually get started. And I'm gonna go very practical here. And when I mean practical, I mean like day to day. What is the things that you're going to be able to do? So thank you for asking this question to us at the TJ Tribe. So the first one that I'm going to say is that well done for aligning that you are wanting to become property investors. So I know a lot of couples who are wanting to do this, but they're not aligned. The one partner is thinking something else, the other partner is thinking something else. So the fact that the two of you love real estate, whew, your journey is you are 50% in. High five to you. Actually, high 10 to you. So that's what I'm going to say to you, to the two of you. So that's the first thing. So the second thing is that I think have a vision on what you're wanting to do. How many properties are you wanting to buy per year, maybe? Have set up some goals also around that. That's the first thing that I'd like us to talk about, right? So the vision here is you wanting to be property investors, and how far do you really want to take it? So sit down between the two of you and figure it out, right? And then the second thing is that have some goals to say you want to buy one property a year, You want to buy 2 properties per year. And then the third thing that I want us to do is that I would like you to think of how best can you create a solid financial plan. Yeah, you can't invest in property if you don't have money, isn't it? It's essential to determine your budget. I want to say that. It's extremely important that you can determine your budget and establish, remember you got goals, right? So once you have established these goals, you want to marry them to your financial plan. So I want to break down this financial planning a little bit. Number one, your financial plan should be very realistic. How much money do we have? Right? Cash. How much money do we have? Number two, how much credit can we actually go and borrow if you're wanting to borrow? Maybe it's how much credit can you access, right? So all of that, then you start also thinking to say, okay, if we've got, let's say, 500,000, of this 500,000, if we are to put it into a property, what are the returns we should be looking out for? Because at the moment, if your 500 is already at the bank, maybe you're already earning around about, let's say, between 8 to 10% on that money. So should you get a property and should it be on 10%? Should be on 15? What is the criteria that you, the two of you, are going to put in? Because when you start going out there to see some cool deals, and then you start working in reverse to say you are going to leave your money in it, you would already have a criteria. And that criteria would be your answer to say, this is a good deal, this is not a good deal for us. Does it make sense? Okay. That was, I think, what was tip one? That was tip number 2? Nah. Number 3? Number 4? I don't know. Let me just say the next tip. So the next tip that I want us to give is that once you have created your solid financial plan and you've assessed how much money you got, you've assessed how much credit you can get, you've actually engaged a bond originator, and the two of you now are in the know of how much money you want your money to work hard for you. You know that in percentage. And then thereafter, what I want you to now to do is to start to do your research. Start to do your research. What do I mean by that? When you are doing property investments, there is different areas, and different areas calls for different strategies, and different strategies calls for different management style, and different areas and different strategies calls for different approach in terms of how you're going to do the investments, right? So obviously you are wanting to do this, you're doing this, you are saying to yourselves, how do I get my first investment property right? So you are looking at an investment. For me, an investment needs to be giving you money. And it doesn't need to give you money in 5 years, in 10 years' time. It has to give you money now. So from day number 1, whilst you're doing this research, the question that I want to ask of you is that you need to go and analyze the market and understand what is happening in your market. So what are the trends that are happening in that particular market? Let me give you an example. You might be in a coastal area, and the trend that is happening in there is backpacks. The trend in the area could be backpacks. So for that reason, you want to do backpacks rooms or backpacks investment, because that's what works in your area. If you are going to be doing anything outside of that, it may not work. Are you going to do Airbnb in that area? Are you going to do maybe family single rental in that area? So what is the trend that is happening in that area? So I won't be able to tell you, but you obviously want to identify areas and to identify a strategy that's going to give you a high growth on your income, or should I say on your capital, because remember, you're doing it for property investment. So that's the next tip. The next tip that I want to also share with you is that as and when now you have identified these couple of things that we've spoken about, the next thing that I want you to do is that start networking. Oh, bam. Right. Maybe you actually don't know what is networking. Okay. You see, I'm talking from me here, right? Remember back in the days when I also started, I actually didn't know what was networking. So I was invited to a couple of networking sessions and I declined because I didn't even know that it was networking. So, what is the benefits of you going to network? Well, you have all heard the term your network is your net worth, right? So, I'm going to say to you, you need to go out there and network with industry professionals. And this will just basically means that you're surrounding yourself with experts who can provide some form of guidance and support along the way. So whilst you're at the networks, you're going to meet bond originators. Whilst you're at the network, you're going to meet plumbers. You're going to meet lawyers. You're going to meet, there's lots of people that you don't know right now, and you're trying to figure where do you find these people? If you're to go to networking sessions, bingo, you're going to find them. I think maybe the next question you're already trying to figure out is, so TJ, where do we go for these networking sessions? There's plenty of them. It might be daunting for now because maybe you haven't been to one before, but there are online communities. The TJ tribe is exactly that. So well done from being here. The second one is that there's physical networking sessions. My friends, the more you attend these networking sessions, I guarantee you that it can be a possibility of opening up doors to opportunities. So go with an open mind to a networking session with an open heart to learn. Go with an open mind and open heart to learn. The more you're going to learn, we always say here at the tribe, the more you earn, the more you are going to earn. That's what it's all about. Bearing in mind, we are answering the question, how do I get my first investment property right in this year? That was the question that someone else is asking, a young couple that we are answering. Now, the next number, right. The next tip that I want us to speak to is around professional services. My friends, when you are now starting in the game of property, there's so many professionals that you're going to need. I've already alluded to some of these. People like attorneys, conveyancers, people like builders, professionals, architect, people like plumbers. It's endless how many you're going to need. Your property might dictate to you in terms of the type of professionals that you're going to need. So let's just talking about how are you going to buy your first property, right? And the professionals that you may need. The first one that I want to speak to is you're going to need what is called a real estate agent. A real estate agent is someone who sells properties. They are a property professional. That person is likely going to introduce you to conveyancers or to attorneys because when your property is being sold, if you're buying a property, that is, are going to need an attorney to transfer the property from the buyer's name to your name. They're also going to introduce you to another professional that's called a bond originator. They're also going to introduce you to the bank, that's another profession. And once you have done that, now you've moved into your property, maybe it's a rundown property. You're going to need a property manager. You're going to need a team that's coming in to do these renovations. So seeking professional advice or seeking professionals, I want to speak to say, seek the professionals first. Who are they? Can they do a good job? Are they regarded as good people in the communities or with their clients? What is the reviews and so on? And then thereafter, you can go in to seek some advice, some professional advice based on the challenge that you might have. The other tip that I want to give you, we're still talking about how to get your first investment property. The other one is that now that you've got all of these people, we may call them the power team, or we may call them the team, right? Some of these people you are going to pay, some of them you are not going to pay. I always say now you're kind of like ready. You've got a team. We haven't gone to view any property yet, right? I'm just giving you some steps that you need to follow here because you've asked the question and Uncle TJ is slamming it to you, smashing it to you, right? And the next thing that I want us to talk about is now start to go out there and analyze some options of properties. I said it right, options. So don't go and look at the one property and then put an offer. No, no, no. Go in and look at property number 1, number 2, number 5, number 29, but don't be like me to get to 100. So I started buying my first property was number 63. That was my first property that I bought. And I had gone into view from number 1 all the way to number 62. And by the way, this was not my first time of buying a property. This was my first time of going out to buy an investment property. I'd already bought a house, the one that I stay in. I'd already bought another one, the one that wasn't an investment. I thought it was an investment, but I was losing money on it. I'd already bought a farm. Yeah, the farm where I lost 5 million, right? All of those things, all of these assets, I had bought them, but the way I looked at these 3 properties versus the way I looked at number 1 to number 62, very different. So I want to throw in here, maybe you don't know how to analyze, and maybe you do not know how to look diligently into some of these properties because it takes time to evaluate potential properties thoroughly. It takes time. So you need to consider factors like the location, the rental yield, the potential of the capital growth. Remember, you're putting your money in it. So don't rush into a decision. Patience is key. What you now need to be doing is that maybe seek some property education, which is another tip here. Seek property education. I think here around seeking property education, I want to slot it in under seeking in professionals. Maybe you need a coach. Maybe you need a mentor. But you definitely need some education before you go out to analyze because you don't know what you don't know. I remember back in the days when my missus and I, numbers used to frustrate us. Well, used to frustrate my wife, not me, right? Yeah. And out of a long time of working through, we got it right. But whilst we were working towards our first investment property, that was a little bit of a challenge. Now I'm sharing this with you so that you can see that the road is going to be a little bit bumpy in your education, but it doesn't necessarily mean this is the end of it. It's just the beginning of a wonderful journey that's coming through. The next tip that I then want to share with you is that now secure your financing. What do I mean by that? Remember, we spoke about financial planning in the beginning. How much money do we have? How much can we access? So now you've gone out, you've vetted in a couple of properties and so on. But there's so many banks out there that issue different types of products. What do I mean by different types of products? Now, traditionally, we all know that the bank can lend you some money for a home. The bank can lend you money. Now you are talking about investment, property investment. There's different products, different banks have created some of these products to say, you can go out there, and if you're doing an investment, as an example, they would say, look, you only earn 10,000, but if you're going to be buying a property and within this property, the property is going to give you 5,000, we are going to consider 70% of that 5,000 to be your income, and now you can be able to afford that property. So the different products that are out there, that's what I am saying. Go out there and secure. I think maybe securing finance is the wrong term. Suss out the different financing options that are there. Now that you are in line with, you're vetting a few properties. Remember, that was my previous tip. So now because you're vetting them, and now you're vetting the options of financing, You can now go through and analyze thoroughly a particular property. That's another tip. Now you've got a property that you like and you're seeing the potentials of it. Now jump into it and thoroughly inspect the property. Make sure that you are conducting a comprehensive inspection around it. Maybe even get a professional home inspector, building inspector. There are so many of them out there, right? You might want to look out for simple things like structures. Could there be a structural issue around this? Could there be potential repairs that I need to be doing, right? All of these things would cost you money if you don't look at them nicely. Then when you look at them nicely and you look at the cost of it, you can then consider to make an offer, which is another tip. But before you do that on making an offer, there's another tip that I want to throw in. Learn how to negotiate. Because when you negotiate and you find the right opportunity or the right property for you, don't even hesitate to make an offer through negotiation. But I always say to people, sometimes you don't have to negotiate if it's a good deal. Because what has happened also in my journey is that whilst I'm busy hard negotiating for something else that is already working, someone else just comes in and puts in an offer and I've lost the deal. So sometimes it's not okay to negotiate. Then the next tip is that now that you have negotiated for your property, you put in an offer, the bank has now given you some money. Now you've got your first investment property. Remember, we also spoke about seeking to seek some professionals. All of these professionals now you are leaving them, right? They are in your DNA now. You're beginning to engage them from time to time. My friend, you have just started building your investment team. Well done. At that junction, pat yourself on the back and say, yeah, well done. And you can come back to this video and say, thank you, Uncle TJ. I have followed this. I know a couple of people that have already been doing this. At the TJ Tribe, we had our mastermind recently, and we've got another one coming up in the next quarter. And a lot of people are buying real estate. A lot of people, we even had awards at the masterminds, and a lot of people are killing it, right? So why are you stopping from also progressing? In this case, it doesn't sound like you're hesitating. It sounds like you're actually trying to find a way, because your question was, how do I get my first investment property this year? So my friends, before I wrap up, I want to say to you, some of you who are ahead in this game, also add in some of your comments. If what I've said is wrong, or you think, TJ, you're smoking socks, if I've missed something, drop it in the comments. But I do think, to you, the couple, congratulations. You are well on your way to unlocking your first investment property. Remember, researching is good. Remember, planning is good. Remember, networking is good. Remember, diligence. Diligence are the keys to success. Patience also, but not doing anything in the name of patience we don't like. No, we don't like here. Don't forget to subscribe. Don't forget to subscribe to our channel as we go along here. But my friends, I don't know if I have exhausted here. I don't know if I've exhausted everything here, but I do think this is where you can start off, right? As a young couple, maybe something else that I've forgotten here is the structure in which you are going to be buying these properties. So you're a young couple. We don't want anything to go wrong, and then it kind of like puts you in a back foot for a long time. So consider to protect yourself in the right structure. Consider to provide to buy the properties in the right structure. Are you buying in a company? Are you buying in a trust? What kind of a vehicle are you going to be buying in? That's the other thing that comes to mind here. young couple, right? Consider if the other one is going to be unemployed, what are you going to do? So don't stretch yourselves too out there, right? For the fact that you love real estate, it doesn't mean that everything is going to be good all the time. So these are the things that you should look out to. You should look out for in your investments as you go along. And the tribe, everyone else is going to give you some comments. By the way, be patient or be nice or be considerate that someone else here is asking from a sincere perspective of starting off. So let's be nice in our commenting so that we are all about education here, right? Remember? So as we go ahead, make sure that when you're commenting from a good heart and you're also doing this for someone else to learn. Remember when you were down and out, when you investment. So yes, this is the Ask TJ show. I've just gone through how to get your investment, your first investment property in this year. This is kind of like a step by step that I've tried to give here in no order at all, but to make sure that someone else can go and do an investment in the property for the first time ever. It is I, your Uncle Lee. Yes, TJ. It's great hanging out with you. We'll check you out on the next video. Don't forget to subscribe.